Okay, so we've done the work or we sold our customer the goods and now we're waiting to get paid. We can also use our accounts receivable as a source of quick cash. Our customers are going to pay us in 30, 60, or 90 days, but maybe we need cash right away. So maybe we've just got a little bit of cash in the bank. We've got a bunch of customers that are going to pay us, but maybe we've got rent due. Maybe we've got credit card payments that have to be made. How can we get money right away instead of waiting that 30, 60, or 90 days? Well, one thing we might do is we might go down to the bank and we might say, we need to borrow some money, and I'll tell you what, we'll pledge our accounts receivable as security for that debt. So if we don't pay you back, you can go right to our customers and collect from them over the next 30, 60, or 90 days. And that's just a secured loan. We debit cash, credit notes pay. Well, maybe that interest rate is too high, and so instead, or maybe we don't want to be bothered with collecting accounts receivable. Instead, we sell our accounts receivable. We sell them to a factor. That's a bank or a finance company. And they give us cash right now today, and we tell our customers, don't pay us, pay this factor instead. And they don't do this stuff for free, so the factor charges us a fee. So let's pretend like we take $600,000 of accounts receivable and we sell them to somebody else. Say we're on our books with a debit of $600,000. So to make that a zero, we're going to credit accounts receivable for $600,000, and let's say the company agrees to pay us $588,000. What do we call that $12,000? Well, we have lots of choices. We might call it interest expense, we might call it a service charge, or we might call it a loss on sale. It's going to depend on the circumstances.
If it's really a sale, and there's a 3-test process for that. Are the accounts receivable isolated from us? Can the person we transferred them to transfer them to somebody else? And do we not have the right to buy some back? If those 3 tests are met, then it's a sale, and we'll probably debit something like loss on sale. Anything else, it's more like a loan, and maybe we'll debit service charge or fees or maybe even interest expense.
So that's 2 quick ways to use our accounts receivable to get cash. Either borrow with them as collateral, just like you might have a home loan with your house as collateral, or sell or factor your accounts receivable by selling them to somebody else.